Oil long-term technical analysis for the week of September 19th. FXEmpire.com. The light sweet crude market had a fairly back and forth week. However, it should be noted that we are bouncing up against a $90 mark that we feel is vitally important for the expansion of this marketplace and the rising prices. We need to see a daily close above there, and as a result, the weekly bar basically was very little on chain or very little changed, but it does show that there is a methodical press to get above this level. It should also be noted that Canadian dollar looks very similar, upside down, of course, in the USD CAD pair, and that shows possible floating towards oil as well. With this in mind, we want to see a daily close above that 90 mark, and we do feel that we will eventually hit 100 at that point in time and possibly go quite higher. But oil tends to like to bounce around in $10 increments, and it does look like on a breakout that's exactly what we'll see in the light sweet crude market. Looking at the Brent markets, it's a little bit different story, however. The Friday bar, after a beautiful Thursday one, we had a hammer and then a beautiful bar on Thursday and then a shooting star on Friday. It does suggest that perhaps we are going to stick in this range between 107.50 and 115, with the spread between light sweet crude and the Brent market so high. Perhaps they are bringing the spreads back in to more historical norms, which would have this market falling slightly while the light sweet crude market would rise slightly. So this does jive well with a historical perspective. Doesn't look like a fall, and it doesn't look like we necessarily need to get concerned about this market. It just looks like we are going to fall back towards the lower parts of this range. Because of that, we like to buy pullbacks. We don't sell this market at this point in time, and buying a pullback is simply going to be able to play this range bound trade on the cheap.